On to Nigeria now. The real estate sector's contribution as a part of total GDP has now surpassed that of oil at 7.2% in 2023. Now that effectively makes real estate the third largest sector after crop production and trade. Data from the National Bureau of Statistics is pointing to this shift, and that's reflecting the ongoing diversification efforts in the country. Now, the surge in property investment is being driven in part by relatively high returns, but also a fairly large housing deficit. Despite this fact, Nigeria still needs at least 20 million units to be built in the country, and that deficit is seen at all income levels.
Spanning nearly 1,300 hectares on the outskirts of Abuja, Centenary City is one of Nigeria's most ambitious development projects. Designed as a smart city, it incorporates green spaces, residential neighborhoods, commercial hubs, and industrial zones. Its first residential phase, 200 units, is already halfway sold, despite being unfinished, highlighting the high demand in Nigeria's real estate market. Managing Director Michael Odenigwe attributes this demand to the country's severe housing shortage and other key factors.
Where the demand is mostly residential. People need a place, the roof over their heads. You're talking about 20 million housing deficit. It's all on the scale. Low income, middle income, high income are all experiencing deficit.
From 2021 to 2023, real estate's share in Nigeria's GDP rose from 5.85% to 7.2%, overtaking the oil and gas sector, which dropped to 6.5% last year. Analysts see this as a critical moment in Nigeria's economic diversification, pointing to real estate's investment potential amid currency devaluation and inflation.
First of all, a lot of people are seeing real estate as a way of store of value because of the devaluation of the currency and stuff like that. So rather than keeping your money in liquid cash, you put it in an asset that will earn you better returns.
The property estate becomes an area of the economy that we must, put a lot of attention into. It will grow the economy. You can count the growth because growth is largely about figures, monetary figures.
Despite this growth, Nigeria faces a housing deficit exceeding 20 million units, impacting all income levels. The low-income segment is the hardest hit, making up 60% of the shortfalls due to high property costs. Industry players argue that policy roadblocks remain a major hindrance.
If the government recognizes the way you put policies in petroleum and oil and gas and all of that real estate has now become larger than these other places, then you need to focus on that to put policies that actually make it grow your economy bigger.
Real estate is now Nigeria's third largest economic sector, trailing only agriculture and trade. While its rise boosts GDP, experts say its impact on human development is still limited. They emphasize the need for mortgage reforms, better access to housing finance, and consistent policies to bridge the housing gap and sustain long-term growth. Kelechi Amekalam, CGTN Abuja, Nigeria.